Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 5th, 2018. Now, to get started this week, we're going to begin with the dollar index. Now, the dollar coming off not too bad of a week, but obviously the dollar really could not hold past the ADP report on Wednesday and is subsequently sold off as we move into our Zone 2 and Zone 3. Being identified in the VantagePoint software. When we back this out a little bit, we can see this heavy resistance zone above 97.85. In this particular case, once again, the dollar puts a top in and then starts to back away. Now, this is pretty common, as I talked about in last week's Forex Weekly Outlook, that it would be very likely that the dollar would sell off towards the end of the week. Now, the slight problem we have now is the VantagePoint critical pivot area, our T cross long, at 95.95 continues to hold the market up. But as we can see, the medium term has crossed the long-term predicted difference. We're combining that with the neural index. That has sent the dollar lower, but next week I think the dollar is going to come under additional pressure, but not until we push through 95.95 and stay below that area. Now, if we look at the commitment of traders report, we can see that the previous week they were increasing dollar positions. This is likely to change substantially when it's updated next Friday, and we'll see these same players starting to back away from the dollar. Now, not a big surprise here that gold has come down into zone 1 and has made a strong bounce out of this area. Now, what I've talked about in the VantagePoint live training room often is that in most cases, the market must go down before it goes up. They have to take all of the stops before they turn around and drive the market back higher. So as we anticipate dollar weakness towards the end of the previous week and going into next week, we can see that real money is moving into gold, and that's what we're looking for. Our predicted differences are very conflicted, but the neural index is firmly telling us that gold is strengthening. We can see in the CD commitment of traders report at the bottom here, positions are increasing in gold, which does not surprise me in the least, and I think that that's a reasonable move. Now, the one thing I will point out with this most recent non-farm payroll number, the event risk from last week, essentially it was a pretty phenomenal number. The U6 number dropping, unemployment, I think the jobs number was around 250. The revisions were flat. Average hourly earnings were up a bit. Everything in the report was fantastic. What often happens, unfortunately, guys, is that the retail traders feel that that's a green light to go ahead and buy dollars, where the swap side of that, they're actually selling around the end of the first week of the new month, which of course is going into next week. So just a little tidbit there to help out some of the traders and make sure you're not getting caught in a dollar bull trap. Now, as for the equities have recovered here. Once again, we've come into zone 2. The market is ripped out of there very strongly. We can assess here that we've got essentially a yellow area around the VantagePoint T-cross long, the main pivot area 27.47. We did have a strong close back to 27.24, but once again we need to break free and clear of 27.47, excuse me, if we're going to go back up and target this somewhere towards the 2900 mark. But the first area that we have to get by, of course, is this level here, which is our zone 1 in the top. That's coming in at about 28.24. That is going to be significant resistance, but I do anticipate that there's a better than 60% chance we are going back into that level next week on dollar weakness. Now, for you oil traders going into next week, there's not a whole lot of good things to say about oil here right now. It's really under pressure. Now, I don't think it's just going to sell right back off into the $50 a barrel mark, but it does look like it's heading lower towards the bottom end of this particular zone. That's coming in around 60.04. I would look for a reversal between 60.04 and the bottom part of zone 3, which is 58.33. I do anticipate it to turn around and go back up, but probably not for a little bit yet. Now, as we move into our main Forex pairs, I think the euro should have a decent week next week. Obviously, this past week, it held its ground, sitting right above zone 1 here, right around the 113.05 area in the live training room. We were buying this one. Once again, we must clear 114.37. We've still had a good strong close at 113.86, but we need to take out the VantagePoint critical pivot area so we can start advancing back towards the first zone here, which would be 115.55. Pretty confident in the month of November that the euro is going to move to that area, but not until we get at least 2 days closing above 114.37. You can see our neural index predicted medium term crossing the long predicted difference. RSI is a little concerning here at 49.1. Not only do we want it above 50, we also want it above 60, so we can get momentum building in the market. Now again, the conventional way of using an RSI for an overbought or oversold is not recommended, actually, guys. What we're using it for is for momentum. That's what it's designed for. So if we're breaking above 60, the last thing we want to do is sell this, guys. We want to look to buy. So if we're holding this lower part of this zone coming in around 113, as long as we hold 113, then we're likely going higher as we move into the latter part of next week. Now remember, Monday is a fake trading day. They're going to try and get you going the wrong way. So the probability that the euro gets slammed on Monday and maybe even part of Tuesday, only to turn around and violently reverse on Tuesday, Wednesday, and Thursday, the probability of that is very, very high. Okay, guys? Now, US Swiss franc, the same deal here. Very little has changed. We put in that new high we were looking for. US Swiss franc should start pushing lower here, but we've got to get below 99.64, guys. That's the key pivot area. Now, we're closing at 1.0031, but massive resistance here all the way up to basically, I would say, about the 102, just below the 102 area. Shorts up into that area are confirmed by VantagePoint, the medium term crossing the long, with the neural index moving lower, and of course our RSI also pushing lower. So again, watch out on Monday for a move higher, but use that move higher to potentially set shorts. Now, with Great Britain, US, a little bit of assistance from the Bank of England this week, but either way, guys, we had a very strong verified zone 1, zone 2, and zone 3 are all stacked up down here into the 125 area. But as I've said in last week's outlook, I did not see Great Britain US going much below 126.60. That ended up being the end of the rally. We've violently turned the other way. The good thing is here, guys, we're closing right on that critical T-cross long, 129.44. Predicted differences are rising with the neural index. The RSI, again, is a slight concern. But once again, even if we're taking this and we're drawing our trend lines in on using the RSI to its full ability, the 60-40 split, we're putting a trend line in here. That little move right there is a little concerning to me, guys, that we failed on this makeshift trend line in the RSI. But again, Friday and Monday trading, we kind of want to take it with a grain of salt, particularly on Monday. We're going to watch for this thing to potentially turn around, which is very, very likely, and continue to move higher based around dollar weakness. Now, try and remember, guys, that this is what currency trading is. It's basically buying or selling US dollars, against the other major currencies. So if the dollar is weak, it's usually weak right across the board. The dollar was extremely weak last week against the British pound, the Aussie, the New Zealand, your biggest gainers on the week. Now, once again, going forward here, watch out for Monday, let that pass. As again, by Tuesday, we'll have a very, very good handle on what we're going to be doing here, and that will likely be buying the British pound, not selling it. Now, as we look at the dollar-yen for next week, this is a pair to be very, very cautious of, guys. When we look at this, everything looks wonderful. We've got a fresh triple EMA cross. My concern is that on the dollars, on that very, very strong payroll number on Friday, that we failed exactly on zone 1. So your order flow traders are going to be watching the area between essentially 113.38 and the additional zone 2 and 3, which are up here in this 114.55. Only a sustained break of 114.55 will take the pressure off the downside. Okay, very important to point that out. We are moving higher right now, but essentially I don't really see us getting much past 114.65, especially if the political climate in the US continues to if the Republicans lose the House, we get more political controversy. That's not good for the dollar. So once again, the probability that the yen strengthens next week is significant. What can actually help a short trade here on this particular pair is if the equities sell off, that will take this pair down with it. But for now, the key pivot area for next week, the first one we want to watch, 112.98, very, very important area. And when we take it one step further, you can see this particular blue line here. The blue line crossing the black line is terrific, but we really want to focus on the blue line, that pivot area, 112.49. Watch that area very closely next week. Now, as we come into our main three commodity currencies, the US CAD very stubborn, holding on to this critical vantage point pivot area at 130.71. Once that area gives way, that should open the door back into the 129.80 area. The probability of that occurring next week is about 80%. It's very high. Nothing's 100% here, guys, but when we're looking at this right now, and again, when we go to our long-term crossover and focus on the blue line only, that pivot area, 131.09, we're closing 131.08, but we're closing 2 days in a row below the critical vantage point pivot area, the long predicted moving average. Again, 131.09. So disregard Monday's trading. If anything, guys, what we're looking for is for it to push higher so we can get a better entry point on our short. And that entry point would be, of course, up in this 131.60 area. Now, the Aussie and the New Zealand, the Aussie is starting to move into Zone 1, making a break for the top of Zone 2 and Zone 3. It's still a ways to go here. Now, if gold continues to advance on dollar weakness, it's going to take the Aussie and the New Zealand currency with it, and the CAD to some degree. So right now we've got a little bit of a gray area here, but we've cleared Zone 1. Our target is Zone 2. Zone 2 coming in at about 73.12. So with the close of 72.56, we would then be looking at a move to 73.62, and then ultimately, if we can get there, 74.29. Now, a break of 74.29, excuse me, if we're to get that, now we would be talking about outright trend reversals here. So right now, the Aussie, I do not dispute, is still in a fairly significant downtrend over the last year. But you'll see that last year at this time, we started to flatten out, and essentially the Aussie was quite strong in December, basically all the way into the end of January of this year. So we're looking for what appears to be a repeat of that. But we do need to get moving. And once again, New Zealand, almost the exact same trade, but a little more concerning here. The Aussie appears to be a little bit stronger. We're already up into Zone 3 on this one, so be careful in this area. If we can take out 67.40, get above that area, we've got a real shot of a trend reversal on this pair also, but it's going to take gold advancing to help these two currencies, not just dollar weakness. So a busy week ahead, guys, but I think it's going to be another very good week. The event risk going into next week, I believe, is the Fed, but I think the general consensus is the Fed is not going to hike in November, so it's likely to be a non-event, but the Fed is likely to hike in December. So any rhetoric around that Fed announcement, still be very, very cautious towards the middle of the week when we start getting into those announcements. So with that said, this is the Forex Weekly Outlook for the week of November the 5th, 2000.